So disciplined trading, let's jump into the topic, and then I'm going to go ahead and hand it off to Troy, and he's going to give you a really great demo, and then we'll talk about the university, the enrollment, and what that's all about. So disciplined trading is really how to avoid seat-of-your-pants emotional roller coaster trading. Why you keep licking your trading wounds and how to take control back of your trading, why trade plans are the #1 antidote to undisciplined trading, and how to combine this 90% mechanical, 10% art of trading to make the perfect trade, which you'll see when Troy goes through what he's doing. These are really key. This is really important. I can tell you in my personal trading, I struggled with this for many, many years, and I told you even before, I don't think I'll ever be 100% perfectly disciplined. There probably are some traders out there who are, but the way that I have gotten to the point of being as close as possible to that is to be as mechanical as possible with my trading. And then this art, knowing that I know a lot about the market, so I've been taught a lot, learned a lot, observed a lot, that I can actually go one better from the mechanical. But just being able to trust my system is a huge part of this, including, look, when you have a bad trade or a bad day, your confidence can get easily rattled unless you are ultimately confident with what you're doing. And the second you get rattled is when things go wrong. So most people, right, they enter into trading and they're looking for the Holy Grail. They look at it, it seems like, okay, well, it looks pretty good. The chart looks amazing. The demo that I saw, even though there was nothing on the screen specific, they told me everything wins. They said the win rate was 90%. The performance graph looks awesome. There's no discussion about losses, so the drawdowns seem really minimal. Almost every day is positive. It sounds great. This is what you're looking for, right? The Holy Grail. It may not be 100%, but it feels pretty darn close to it. Well, the Holy Grail is very breakable, as you all, I can guarantee you 100% here, have experience. You start to trade the method, and it starts to fall off a cliff, right? You can't seem to replicate what's on your chart. There's more losers than you expected. Your drawdowns, as a result, are much larger because you didn't take account for as many losers that there really are. It's highly complicated. Maybe you start to make mistakes in your execution, right? How many times have you gone long when you meant to go short? How many times have you set your stop at a wrong place, your limit at a wrong place? You canceled something you weren't supposed to. You misread the rules, right? The good days don't outweigh the bad days. What happened? You go into this with the best of intentions, and then that Holy Grail, it just gets shattered. So we need to kind of cover some of the things that tend to go wrong. What tends to sabotage our results? What tends to shake our confidence? Or maybe we entered this and we never had the discipline or the confidence. Well, one thing a lot of people do is they really start to curve fit and over-optimize. So they optimize the system to get 95% winners, to get 100% winners. They fix the stop to the point it gets large enough to wipe out any loss in the past, right? And what do you end up with? You end up with what looks like a great system. It has no closed losses. It has nothing but a positive equity curve. It all looks great, but that just doesn't work. You can't trade that way. Yes, you have to tune and optimize any trading system. We all can only build a system on the past, right? None of us can necessarily predict perfectly what goes forward, but people tend to way over curve fit and over optimize. So the things we try to tell you to look for that are much more important than the bottom line profit are smallest drawdown possible, above a 50% winning ratio. We really would love to be 60 to 70%. The average money you make per trade is critical. People sometimes trade plans that have a great looking top line number. Oh, this made $10,000 in the month. But then they forget that it was made up of 1,000 trades, and the average was $10 a trade. Half that's going to be commission, and God forbid you have slippage or make a mistake, right? Another thing people don't think about is, let's say they're going to day trade. Their plan makes them trade all day, 8 hours a day. You're not going to be able to maintain focus and intensity for that much time, okay? It just won't work. And the thing we really focus on a lot is focus in on the worst day, the worst week, right? Nobody likes to do that, but we want to force you to look at what can really go wrong and build from there. If you do some of these things, you will be so much better than 95% of the rest of the traders out there, right? Because we get very taken in by the equity curves that look like this. And I'm going to be honest with you, your trend jumper earnings curves will look like this. They will look like this. What they won't look like is this, all right? Because we also are factoring in the same things. We do not go for foolish right win-loss for things that have potentially a huge drawdown. Our systems are not over curve fed, over optimized. All right, and of course, when you have multi-years track record, you know what's going to happen in real time. So you can't get taken in just because there's an equity curve over a set amount of time that looks good. I can tell you in my personal experience from building trade plans that 9 out of 10 of the plans I try to build fail. Sometimes they fail after they look so amazingly promising because they look like this for a while. But then by the time we go over our criteria, which is a certain length of time, a certain number of trades, this happens. It's incredible sometimes that this can happen when you have so many trades that are positive that it literally can fall apart just in a shift in the market. All right, we talked earlier, right, asked you about what do you have as an acceptable drawdown. Well, this gives you an idea why those of you who thought 30 to 40%, would be acceptable. It doesn't mean you can't come back, but look what kind of gain you need just to come back to break even. 43 to 66%. If you lose half your account, you go from 5,000 to 2,500, 10,000 down to 5,000, you need to double your money just to get back to where you started. I'm not going to say in active trading you can't make 100% over time. Over time, right? This isn't, false, giving you false expectations that you're going to double your money in a week. You can if you use crazy risk, and crazy risk leads to disasters. So again, I'm always going to be talking in the perspective of trading as a real business person with, modest risk per trade. But it's really important, we found, to try to keep those drawdowns certainly below 20%. And it seems like where people's psychology starts to get really rattled, in our experience, is about 15%. And this has been working with thousands of traders. This is over time having some managed fund trading where people start to get really nervous and maybe start to freak out a bit, is right around that 15 to 20% range. And for good reason, because look what you start to need to make in order to come back overall. Another thing that people don't realize, disciplined trading means targeting only the very best time frames, the very best markets, and having a specific plan. We started out in the survey, only about 1 out of 5 of you trade this way. It has to be 5 out of 5. Otherwise, you cannot succeed consistently. It just will not happen. And one of the things that we've taught over the years, which is a really kind of different philosophy for people, is we teach you to quit. We do not make more money by trading more. It is amazing that people, when we start to show them that if, let's say, you start at 8:30 in the morning and you're willing to go to 11:30, but if you hit your objective at 8:45, you should quit. Most people are like, no. You should go to 11:30 because in the end, you're always going to make more money, right? It's the same system. It doesn't work that way. The way trades pattern out, the way markets like to go volatile and then die, it will not work that way. So we have something we call POQ, which is power of quitting. What this means is when we enter any day when we day trade, this doesn't apply to swing trading. Swing trading is different. But on day trading, if we have one winner or more and a positive result in the times that we trade, we're done. So that means if the first trade out of the gate wins, finished. The first trade out of the gate loses, no problem. We keep going. But maybe the second trade wins, we're 1-on-1 and we have a small profit, done on that day. Because days are very giving sometimes, and there are other days that are just not generous at all. So having this approach, it is amazing how much more consistent your trading will be. You have to be specific. Disciplined trading also means understanding the thrill of victory and the agony of defeat, right? I mean, we talked about drawdowns. There's fundamental changes in the markets. Volatility disappears. This year has had much lower volatility in the Forex markets than ever. I think in like 15, 16 years, okay, in some cases. Now, it's picked up some recently, but things do change. Markets don't always stay the same. And clusters come in clusters. And I won't use the other word that you sometimes hear with this. Yes, it can be a cluster, whatever. Losing streaks will happen. And trading is very streaky. I find in my results that I can have certain markets that for weeks are amazing, and then for whatever reason it hits a week that just doesn't really work. Now I'm confident enough to know, and I have that back track record, that bad week or even 2 weeks in a row, it's not a big deal, because in the grand scheme of things it doesn't matter. But I have to be fully equipped to deal with that, and that's part of Murphy's Law. The day you start our best trade plan might be the day it has a bad day. You can't control those things, and actually usually that's what happens. And your trader psyche gets all flustered. You start to kick the dog. Things do not go well, and you start to think about your lifestyle needs. That's why you should be in this. So there's a lot to balance, and you have to your best of your ability, be as balanced as possible. Now Troy's going to talk about this because it is very, very important. You have to approach trading, a disciplined trader always approaches trading as a business, not as a gambler. Too many of us trade this like a gamble, like going to Las Vegas. It is fun. It can be very entertaining. It can be amazing, rewarding, but so can Vegas. But usually Vegas eventually is none of those things, right? So it's really critical, that we understand that we can control a lot of things, right? We can control risk. We can control our plans. There are things that we cannot control. You can scream at the screen all you want. It's not going to make a bit of difference. If you're at a ball game, you can scream. It might make a small amount of difference. But I'm telling you, the guys on the floor and electronically around the world could give a crap how much you scream and cheer, for your oil trade or your S&P mini short trade. Nobody cares. So you have to surrender to the things you can't control, but there's very important things that you can control, and you need to be in control of all of those. Disciplined trading means it's not a marathon. Too many people turn trading into a marathon. They try to trade, like I mentioned, way too many hours, or they turn it into a sprint where they think they're just going to take tiny little pieces out. I'm going to take one tick on every trade or 2 ticks, and if I take 100 of those, look how much money I'm going to make. It's not going to work that way. You can't approach it either way. There's actually like sort of a hybrid between these, okay, where we take a certain piece of the average daily trading range. We're not going to look to buy at the lows and sell at the peaks. That's a great marketing gimmick, but nobody can do that successfully. We're looking to take out a reasonable piece of the range every day where the risk is stacked in our favor, where we know what the risk is, and the rewards are, like I mentioned, are in our favor overall. That's the mark of a confident, disciplined trader, okay? So discipline always means knowing your trade plan. I'm not going to have a lot of time to talk specifically about trade plans today, but let me just show you, give you at least an example of what I mean by what a trade plan is. And I'm going to switch over here to unleaded gas futures. This is a market you may or may not have ever traded. One, when you've got results that go back to, and these are real results, 2012, if you have a bad week, how confident will you be knowing that this plan's been out for several years and been performing for several years? And how confident will you be when you can look at the worst week, and build from there? Forget the best weeks, right? Makes a huge difference when you know what the, your overall dollar averages are going to be, and you understand if you have a bad week, like you lose $500 this week, the next week comes back and makes $1,000. You can prepare for those things, and you can make the kind of numbers you're looking for. All this is based on one contract, by the way, without any scaling. But what's more important is knowing the exact specifics on every single thing, meaning the software that you use, you'll know every single setting that will optimize this plan. So there'll be, literally no subjectivity there. Your confidence will skyrocket when you're not having to figure all this out, because it could be worrisome for somebody. When you know the exact hours that you should be trading, the exact start times, what you should, your maximum number of losses on a given day, what your power of quitting should be, what days you should trade, what days you should avoid, how you should approach your money management, how you should approach your art of trading, which we call key levels, which we teach you. Should you get on board a trade that started before the start time or not? These things drive you crazy unless you have those rules firmly in place, and of course the opportunity to ask all the questions on anything that's not clear for you. Your confidence will skyrocket. Every single trade plan works that way. The same goes on all the different trend jumper plans. When Troy shows you some of these, there's a written plan for every single market that we trade. Exactly the style of chart we should use: tick chart, range chart, minute chart. What is going to be our power of quitting? When do we start? When do we stop? Everything that you need to know, again, like I said, and when you know that all these plans work and have been profitable historically, talk about how your confidence will skyrocket as a result. I mean, that's why trade plans are just so critical overall. Now, you got to think, how can you change? These are a lot of the problems and a lot of the things that people run into, but you need a trading system that provides consistency. You need exact trade plans that you can easily follow. You need the training on how to work with your system, how to work with the trade plans, how to put you in the best place every single time. You need to know what to do in every situation. Like, did you know what to do on Fed Day? That happened this past week. You have to know what to do, and part of that means we really got to sort of change ourselves. We have to reprogram ourselves. This is something that I had to do because I had the bad luck of being very successful early in my trading, and that was the worst thing to happen for me because I thought I had it figured out, And I just realized I just caught that equity curve on the way up. I got lucky. You know, I mean, think about how many people were traders back in the late 90s, early 2000s. I mean, everybody I knew, my whole family were investors and traders and making money. None of them are, you know, for the most part, probably a year later, because they had no idea what they were doing. So you need to reprogram yourself, and the way you have to do that is, I'm going to just talk very briefly about how your brain works. You have to rewire what's called your neural pathway. Not everybody, you know, maybe some of you have heard about what this is, and some of you haven't, but, you know, if you break your trade plans regularly, you trade outside the trade zones, you exit winning trades too early, you know, you hold losing trades way past the stop, you spend a lot of time wishing, praying, and hoping. I definitely have done a lot of that. You have a lot of anxiety when you trade, right? You worry too much about the trade that's on. Do you feel that? I mean, if you guys are feeling that on every single day, it's a big problem. And you get very low when trades go against you. It does really feel like there's a conspiracy. Believe me, I have thought that there was a conspiracy against me many times, and I'm really not somebody who's paranoid, but it certainly feels that way. And you self-sabotage yourself, right? You continue to do stupid things over and over and over again, and you tell yourself, I'll never do that again. And the very next day or the very next time that happens, you do it all again. You know, even worse, maybe you actually have a plan, but you break all the rules, right? You finally have a trade going your way, and you jump out too soon. Right? I mean, I had a trade yesterday on that unleaded gas market. My first trade lost, and then the second trade had this big target, just the way that it was working out. And I had second thoughts. I was like, oh, it's a Friday. It got back to positive. I was almost tempted to break the plan and just to get out and feel good about myself. Stupid move, because it ended up going to the full target and made substantially more. But what was going through my head is I had another trade early in the week where I thought the same thing, and I didn't get out. And you know what? I ended up making less than I could have if I just would have broken the rules. That's the worst thing to happen, is you break the rule and it works, because then you start to reward yourself. Your brain feels that reward, and what's it going to do next time? It's going to make that poor decision again, because you remember that high. You remember, oh, I did something proactively. I made a decision that really was wrong, but it worked. I know something more than the system. Not a good idea. So you end up following these well-worn paths, like in a forest, like that picture. And unfortunately, that's the path of least resistance. The hardest thing to do is, once that's been programmed in your mind, is to jump off of that. It's scary, it feels risky, and it just isn't something that you do. And unfortunately, you go down the same path over and over again. It's not easy to create a new path, right? I mean, because these neural pathways were ingrained in the brain with learning experiences. And unfortunately, we have this tendency to remember the times that we make bad decisions and it goes our way. And we are really good at covering up the ones that don't. So we continue to follow that same process. The good news is, all is not lost. It is not impossible to retrain yourself. It can be done. Probably everybody that comes to the university goes through a retraining process. It's just the reality of it. But, you know, you have to learn, and you have to have some things that will contribute to that. You need reward. You need repetition. You need motivation. It needs to be memorable, the experience. You know, you start to take positive actions and you start to create new paths. This is how you do it. So when you're following the Premier Trader University and the Trend Jumper, and you're starting to get rewarded for what we taught you, and maybe in the beginning you're not that confident, but it starts to work, and you start to repeat it, and you come to the live training and you get very motivated, and then you have this amazing day or week, you're going to start to create these new pathways. This is how we all learn, and no matter how old we are, we can still change the course of how we go about things. Yes, we have to conquer fear, right? A lot of us are very afraid when we start to trade, especially if we've had some bad experiences, right? But what we've learned in our trading is, you know, we don't fear the drawdown. We don't fear being wrong. We don't fear missing a trade. We miss some trades. You know, we don't fear, like I mentioned, exiting at the wrong time. Sometimes we're tempted, but we don't fear it because we've created these new neural pathways, okay? We don't fear taking the next trade after a loss. A lot of you will quit probably now, and right when you quit, right, that's when all the good stuff starts to happen. How often does that happen? So what you can do, a few suggestions, is you can journal. It seems kind of silly, I know. Some of you are like, oh, I'm not going to journal. I'm not going to write Dear Diary. But it's amazing. However you do it, you don't have to write something out. You can bring up an Excel spreadsheet, you know, just record what happened with your trades, and if you did something wrong, maybe put down what you did. You have to start identifying those things and being honest with them. I'm going to tell you what I mean by the 25 trade demo rule in a minute. it has to be a reflex. So every single trade you take, and Troy, when we go to the live chart here in a couple minutes, you're going to see every trade that he takes becomes a reflex overall. Detaching your emotions, very important. Doing the back testing, right? Understanding what came before is hugely important when it comes to you being confident. You know, maybe standing aside and watching live trading for a while before you jump in with real money will be the difference maker. You know, setting up an acceptable drawdown like we've discussed. You know, think about athletes. The way they become pros at what they do is just repeating things over and over and over again until it's a reflex. The best golfers, tennis players, baseball players, football players, whatever, you know, soccer, it's all done through practice and repetition. So in the heat of the moment, it's a reflex. When you get to the point in your trading where it's simply a reflex, that's when you're going to succeed at a whole nother level, and that's just truly what it is. Now really quickly, because I got to start to move along here, the rule of 25 that I mentioned, no matter what, when you start with the university and the trend jumper, you want to follow this, and this means just as simple as this. You need to take 25 trades in a row. Do not do it with real money. Make 0 mistakes. Execute the trade plans perfectly. If you can do this, you are now ready to graduate to live trading. I didn't say win 25 in a row. Nobody's going to win 25 in a row. It's very unlikely. But just do everything correctly. If you do this, trust me, you will be so much more disciplined, because what will happen is you're going to break a ton of rules. It's going to take you a little while to get to 25 in a row. But if you're patient enough to do this, you absolutely will and can succeed. All you need to succeed in the market is a great plan, right? Eliminate mistakes, adhere to the plan, understand your drawdowns, and be able to scale to new highs.